Hopefully you can all hear me and we can have a conversation. You can ask your questions and I'll do my best to answer. I've got a few topics I want to talk about today. We're going to talk about GST in particular with resales of new homes, new stratas. We'd also touch on assignments. We're going to talk about LODA, the Landowner Transparency Act. We're going to talk about the market we're involved in, and then we're going to chat a bit about, or I'm going to chat a bit about my website and Terra Firma. So I'm going to start off with GST, and this has come up a fair bit lately. And the question we typically get is this. My client purchased a new home, a new strata unit. They closed last week. We now want to resell it. Never been lived in. Is there GST payable to the next buyer? So GST's been paid once to the developer, but the property is still vacant and is not used. It's still a new property. And the answer to this question, unfortunately, is maybe. It depends on the intent of the seller when they purchase the unit. If their intent was to purchase the unit as an investment, either to flip it or to resell it, they are deemed to be a builder under the Excise Tax Act. And in that situation, they're required to charge GST to the ultimate buyer. If their intent at the time of the purchase was to live in the unit, and for some reason they're no longer able to do that, like changing event, marriage, divorce, kids, whatever, then because their intent was to move in, they are not deemed to be a builder, and therefore GST is not payable to the end buyer. So it really depends, or only depends, on the intent of the seller when they purchased the unit, when they executed that contract, not when they closed, when they executed that contract. So let me give you an example, or maybe a couple. I'm married, I have 3 kids. I buy a 1-bedroom condo in Kelowna. There's no way I was planning on moving into that unit. There's no way I could take my wife, 3 kids, move from Vancouver, and move to Kelowna and fit into a 1-bedroom. So there, I think I know I am clearly an investor. If I was to sell that unit, I would have to charge GST. Now, the government doesn't get GST twice. I just want to kind of talk about that for a moment. I charge GST to the new buyer, but I get to claim, and I remit that to Ottawa, but I deduct from that the GST I paid earlier as an input tax credit. Think of yourself as realtors. You incur expenses and you pay GST, and you're entitled to deduct those expenses when you collect GST under commissions. It's the same thing for me as a builder. I would have paid $30,000 in GST, if that's the number. I now charge $35,000. I only send $5,000 to Ottawa. So Ottawa's not collecting it twice. We're just changing who has to pay it. So it's the intent of the seller that's critical here. And unfortunately, only the seller knows what their intent was. The buyer has no idea what their intent was. So you as a realtor, this has to be really clear in any new contract or in any assignment, who's paying the GST, because if it's not, it's deemed to be included in the price. If you're acting for the buyer, you want a representation or warranty that the seller is not a builder, that their intent was to move in, there's no GST, and if there is GST payable, if it's ever found that the seller is lying and they should have charged GST, the GST is included price. So your buyer is not on the hook. If you're acting for the seller, you need to have this conversation with them, or you can refer them to a lawyer and find out what their intent was. And they should be willing to give that representation and warranty. Now, a lot of them don't, but at least the buyer knows, eyes open as to what the GST situation is. So we can't give you a definitive answer as to whether GST is payable or not. It all depends on the intent of the seller when they purchase the contract. Is that kind of clear as mud? It's the best I can do to explain it, but does it help at all? Is there any questions on that?
That works for me.
Okay. All right. Well, that was easy. I thought I'd get a few questions. Let's talk about short, LODA, the Land Ownership Transparency Act. And it's all about the provincial government's initiative to create more transparency so we know who are the true owners of companies, properties, things like that. So for those brokers out there and for those of you who have holding companies, you should have just gone through an exercise with your lawyer, it's just lawyer, on identifying who the significant individuals are in your company. You had to make a note of everybody who had 25% interest or more. You had to create a new registry, and it's all to do with finding out who the true owners are of companies. Government's extending this to land title ownership. So effective the end of November, anytime a purchase goes through, the lawyer or notary has to report if the buyer is what's called a reporting body. And that's typically a company, a partnership, or a trust. If so, we are required to obtain from the company their company records and make a note and register everyone who's what's called a unit holder. And these are people who have at least 10% of the shares of the company. 10% of the shares of the company, or they have the right to appoint directors. We now need to register that. We will need to register that effective November 30th or December 1st in the LTOA or LOTA, this new registry that we're creating. So it's a way to find out who the true owners of the company are. Right now, you see a company is the owner of a strata unit or an office building or whatever. Who knows who the heck really controls that company? This is the way to find out. So this is all part of this, money laundering thing that the government's been doing, and rightly so. There's talk that this will eventually lead to property transfer tax on commercial purchases because that's not applicable now in many situations. But you're going to hear a lot more about it. From your point of view, you need to know that this is coming. You're probably going to hear a lot more about it. And you need to know that if your client wishes to purchase the property in the name of a partnership, a trust, or a company, you need more time for closing. Don't do a quick close, because if we find out that a company is purchasing and that company is owned by two shareholders, each of which is a company, and one of those companies is holding the property in trust, well, it becomes a dog's breakfast. And we need to drill down till we find who the true unit holders are. And that may be 2 or 3 or 4 layers. That's not common by any stretch. But if you're doing any kind of commercial real estate, it may be. We do a lot of limited partnerships with general partners and trust holders. So it will take more time to close. No doubt it will be more expensive as well. So even if someone is buying a small little strata unit in Fraser Valley for $400,000, want to put their company name, it will take longer to close and it will be more expensive. You just need to know that.
Hey Tony, question is, do we ask agents need to do anything specific about LOTA, like anything we need to do on the contracts, anything special we need to do?
I haven't seen anything yet about that. We are still 5-6 weeks away, and the government's been preoccupied with the election the last 3 or 4 weeks, and so everything's been put on hold. So I don't know. Just kind of keep your head up. We'll try and email. We haven't sent an email out to our database in months now. It's just been so busy. But as this comes up, we'll try and get some information out there. As of now, nothing changes.
Okay, couple more.
I don't think you'll need to do anything in your contract, but you'll need to allow more time for closing, at the very least.
Okay, couple more questions. So if nobody has moved into the property, GST could be payable. Do you have a recommended term that states if GST is applicable, the seller would pay?
Well, it's literally as simple as that. If GST is ever deemed to be applicable, it shall be included in the price. We don't send out standard clauses anymore, and I'll tell you why. And for those of us who've been around a long time, you remember the leaky condo crisis. And my firm used to prepare addendums all over the place and send them out. But what we found was, and I hope I'm not insulting anyone, realtors often don't think what they're putting in the contract. And we found a number of contracts with our addendums in there that had absolutely no bearing. And if anything, they confused the contract. So we no longer send out standard clauses. Your phrases and clauses book should have something. about that, but really it's as simple as buyer warrants that there's no GST payable, and if ever deemed to be payable, it's included in the price.
You mean the seller warrants?
Seller, sorry, yes.
Awesome.
Yeah.
Okay, next one. Question. GST is not being paid twice. If the first purchaser completes and pays GST and is designated as a builder and end purchaser then pays GST as well, that is GST being collected twice. What am I missing?
Well, yeah, so think of the first purchaser paid the GST to the developer, but when they sell, that GST becomes an input tax credit. So they get to deduct that input tax credit as an expense. Much like the example I gave was the realtors out there. You're doing things in the course of your business and you're paying GST. But when you charge a commission, you receive GST. And so at the end of the quarter or the end of the year, you calculate all the GST that you've received on your commissions, and you're allowed to deduct whatever you've spent on GST as an input tax credit, an ITC. And you send in the net amount to Ottawa. Ottawa's not receiving the GST you paid on your gas and your business cards and yourself, whatever it is, and receiving the commission GST. They're receiving the net amount.
Can I follow up that question? That was me that put that one in there. Can I ask a part B?
Yeah, go for it.
So if someone purchases a unit and completes on it, and they are going to be designated as a builder and plan to sell it to the end purchaser, can they not delay GST payment for a certain amount of time, and that way it's just kept on standby till that end user?
That will depend on the contract and the developer. Most times, if this was a commercial unit, then absolutely. GST is never paid because the buyer and seller both get a GST number and it's simply deferred. But if it's residential, most developers do not allow you to defer the GST. But if they did, then great.
Okay, thank you.
You'll need to get permission from the developer to do that, but it's not likely that's going to happen because then the developer is at risk if the buyer doesn't pay.
Another question. How far back does the Exercise Act reach regarding pre-sale purchase, commitment date regarding GST transfer to subsequent buyer, grandfather purchaser unit when?
I don't know. I know the Income Tax Act is 7 years, but if they see any kind of fraud, they can go back forever. So I assume the Excise Tax Act is the same way, but I don't know. You might need to check with an accountant for that one.
Okay, next one. Are there any changes if the seller is a company?
No. No, no, it's not. I mean, the seller, a company by law is deemed to be an individual. So, no, again, depending on the developer. If the developer allows companies with GST numbers to defer, then great. The ultimate buy, the first buyer is not paying GST. But that doesn't change the fact that GST is payable on the second purchase. And the first buyer will send all the GST to Ottawa. There'll be no input tax credits.
Can you list a few situations where GST might be applicable? So if one is resale of pre-sales that's never occupied. What are some other situations that GST might be applicable?
I did return. I didn't.
Well, GST is applicable on the sale of any new property, any substantially renovated property. So the question is, what's new? And this so really what we're talking about here, these resales, these are still considered new. But GST is payable on the sale of any new property, residential, commercial too, unless both parties have a GST number, or a substantial renovation.
I remember reading somewhere that if the owner is a company, GST might be applicable due to the fact that they can apply for input tax credit.
Well, GST on residential properties, some developers allow the company to defer the GST. Others don't. That's kind of what I was saying earlier.
Okay.
Now, commercial property, for any of you selling commercial property, this conversation goes out the window. Because in a commercial property, if both the seller and the buyer are registrants, then the GST is deferred. So that's a whole different conversation.
Okay. Regarding,
but if you're doing, excuse me for one sec, hang commercial property, I really have to caution you. It's a different beast. There's different representations and warranties. There could be a share purchase involved. There's a lot more risk involved in doing those types of transactions.
Okay, next question. What about selling assignment of contracts?
Same thing. If the first buyer, if the person doing the assignment, the assignor, wishes to assign, and if they entered into the contract with the intention of moving in, then there's no GST on the. But if they did it as an investor, so my situation in Kelowna, like I described earlier, there would be GST on the bump. So the GST is paid to the developer, and then the GST on the bump is paid to the assignor, and they would remit that to Ottawa. So it's the same kind of process, the same questions of the seller, the same investigation as to their state of mind when they entered into the contract.
Okay, next one. What defines a substantial renovation?
Yeah, it's not, there's no hard and fast rule. Generally, it's down to the studs. So you really need to gut it.
Okay, and if a number company is making an offer on a foreclosure in court, will this affect the closing date?
Well, a foreclosure has nothing to do with GST. A foreclosure is all about the courts and the court order. So whether it's a numbered company or an individual or eXp Realty making an offer, that offer has to be subject free. It then gets presented to the courts, and the court approves it, or in the rare situation turns it down. But once it's approved, whatever date's on the contract is the closing date.
I think that question might be referred to LOTA, I'm guessing. Wanda, is that what you're asking? Are you referring to LOTA?
Well, yes. So whoever's preparing that offer should give more time if there is a company involved, whether it's a numbered company or a name company, it doesn't matter. But yeah, we'll need to, as of now, based on what I've seen, we'll need to comply with the LOTA, whether it's a foreclosure or not. Anytime the buyer is involved, supporting body, we will need to comply with LOTA.
Okay, I'm going to skip to this question. You just spoke GST owing from purchaser 2 on the lift bump. Just clarifying that GST owing is on the lift, not on the entire purchase price.
Sorry, I missed that question. Say that
So
again.
back to the assignment GST. The question is, you just spoke GST owing from purchaser 2 on the lift. Just clarifying that GST owing is on the lift, not on the entire purchase price.
Well, it will be on the entire purchase price. It's just paid in two parts. So I enter into a pre-sale to buy a unit for $500,000, and there's GST on that $500,000 payable to the developer. I now flip it to Peter Talbot for $100,000, for $600. But Peter doesn't owe me $6. Peter owes me $100 and owes the developer $5. Peter will pay GST developer on the $500,000, and he may pay GST to me on the $100,000. It all depends on my intent. So the full GST is still being paid.
Perfect. What constitute lived in? How many months or consistent of inconsistent living in a property is deemed to be lived in?
Yeah, there's no firm rule. The longer, the better.
So let's say the deal completes this month. I just got keys to my pre-sale. I live in it for a week and I sell it.
No, a week, no. 3
A
years,
month?
yes. Somewhere in between.
Okay.
And a lot of it will depend too. So let's say that you move in. Well, actually, I shouldn't say that about a week. It could be yes. Let me give you a wild scenario here. I purchased a contract. I entered into a contract. I'm not married. I don't have kids. I'm single. I buy a 1-bedroom condo in Yaletown. I work for TELUS. It's now time to close. I close. I move in. A week later, I get transferred to Edmonton. Well, okay, that one there may not be GST because my intent was to move in. I did move in, and there's a very there's something that's happened that's forced me to sell. I've never done this before. I've never bought a pre-sale before and moved in and then sold it. I think in that situation, someone could argue that there's no GST and there's no income tax and it's a principal residence. But if I'm a real estate lawyer, and I'm still not married, no kids, and I've done this 10 times, and there's no way a week is enough. So every situation is different. Each one depends on the facts.
Okay, this one is back to the LOTA question. We have a listing where 50% of the ownership belongs to trust that is controlled by the owner on title. So title only has owner's name registered. How is that dealt with under the new rules coming?
Well, LOTA, one thing I didn't mention about LOTA is that this is for buyers. So that property that you have there with the trust as the owner, that property is being sold, but it's being sold to an individual, then it's just a regular deal. Now, what I failed to mention with LOTA, and this question reminds me, I forgot to do it, is that existing homeowners need to comply. So let's take this example with the trust. They have 1 year to comply with LOTA. So if they plan on selling within the year, that's fine, get the property sold, and there's no issues with LOTA. But if they're going to keep it for a year, then they have to comply with LOTA as well. So I, for example, own my office building out here in Coquitlam through a company. I have 1 year to disclose who the shareholders are of that company. But if I plan on selling within the year, I won't bother.
Okay. Next question, back to GST. Where's the best place to refer clients for GST advice prior to entering into a contract?
An accountant.
Accountant.
Any accountant will do, yeah.
Okay. Another question. The term seller is responsible if GST is deemed applicable. If the seller refuses and the fight starts between buyer and seller, ultimately, who does CRA consider responsible and who do they go after?
Probably go after both. But see, what I'm saying is that should never happen, because that fight should happen before subject removal. So now if the buyer still enters into that contract, they know the seller's not given the warranty, they may be taking some risk on in that. So the whole point of this is to have the conversation between the buyer and seller through their realtors, who's responsible, and someone's going to take the risk. As long as the parties can enter into any contract they want, as long as they know the risk involved. There should never be an argument on closing. It should never be an argument amongst the lawyers. If so, the realtors are negligent. They haven't done their job properly.
They're asking what if the seller lied?
Well, if it's in the contract, buyer's fine.
Yeah, so Blake, they have to put seller warrants. GST is not applicable. So the seller is warranty on the contract that GST is not applicable. So if the
But
seller
you
lied,
also want to add, and if the GST is ever required to be paid, it shall be included in the price. And if you got that language, it's the seller's problem.
yeah. So make sure you have seller warrant is not applicable, and if it is, seller, it's included in the purchase price. So it's
Yes.
already paid.
Yes. Yeah.
Can I just clarify?
Yeah, go.
Question. So, but back to that question, if the seller warranted what their intent was, I guess just my question is, legally we in court, but what if the seller is declared bankrupt? Like, what if there's nothing there? Does CRA ultimately turn on the buyer? Does CRA look at the contractor and say, okay, we'll deal with them, or do they just go who after's got the money?
CRA will always look at the contract, but if the contract says it's included in the price, buyer's off the hook.
Okay. Thank you. Thank you.
You're welcome.
Next question. What if it's a brand new house, but there's a tenant living there? GST would have to be paid.
I'm sorry, what was that question?
It's a brand new house and it's tenanted. Is GST applicable?
Well, if it's tenanted, it's used.
What if it's only tenanted in the basement?
But still a used house. Now, if the tenant's only been there for a week, well, then we have our earlier comments, right? But if the top floor has been vacant for a year and the downstairs has been rented out, I think there's a good argument that it's used residential property. It's hard to think of every scenario, and every question is going to be based on the facts that you have in front of you. So you need to be aware that there's issues, and then you need to have a resource, someone to go to answer those questions. So whether that's your lawyer or your accountant, someone, you need to have someone in your back pocket when these situations arise. So that's why you need to have a relationship with either a law firm or an accountant for the GST questions.
Okay.
Eddie, I have a question.
Okay.
My question is regarding if somebody purchased a residential lot, he gave the GST number and deferred the GST, and now he puts back that lot in the market for an extra price. So how the GST would be treated in this scenario?
Well, I would think the GST would be payable by the end purchaser unless they have a GST number.
So the end purchaser will pay GST on the full amount or the extra amount that he's paying?
Well, the full amount of the lot.
Okay, thank you.
So I'm just trying to read through the questions. Is there a website to find out more about on the excise tax?
Well, yeah, the government's got a lot of them. Good luck getting through
Google. Hey, Mary, I don't understand your question, but the title has never been transferred. If you can expand. Oh, okay. So, yeah, Mary, I'm not too sure what you're asking. Do you want to speak up and just ask your question? And another question is, can you recommend a GST accountant?
No. You need to find your own, someone that you work with. And I mean, I have one, but they don't want to sit there all day answering questions from realtors they don't know.
Makes sense. So build that relationship with lawyers, notaries, and accountants. That way you can ask questions. John, go for it.
Yeah, I felt the notary.
So my question is, can you hear me?
Yeah, go for it.
Okay. So if we were to, let's say, purchase the property at $700,000, pay the GST $35,000, and then sell the property for, let's say, $735,000, and then the GST amount would be, be payable again on the 5%. Would we be paying the full 5% or the difference again? Do you get my question?
Hey, wait, Tony, one sec. Hey, John, you have a very noisy background. It's very hard to hear you.
Oh.
Sounds like it's raining where you are. Hello? No, I lost John.
Oh, he turned it off.
Is that better? Hello?
A little bit. Go for it. Can you ask your question again?
Yeah, so Tony, just curious, if we were to purchase a property brand new, just completed, 700,000, and we turn around and sell it brand new, let's say at 735,000, will we be paying the full 5% again, or the difference? Do you hear me?
Sale of a new home for a second buyer.
Is it just me, or is it cutting out?
Let's just say you sold it for $800,000. The new buyer is going to be GST of $40,000. The assignor, not the assignor, but the first buyer paid $35,000. So they filed their GST return where they say they collected $40,000, they spent $35,000, they send $5,000 to Ottawa. So the second buyer pays GST on the full amount. The first buyer makes the adjustment and sends the difference to Ottawa.
Gotcha. Thank you.
What happens if a property was never disclosed by the seller that GST was applicable, a very small working farm, and the buyer and the realtors only find out on completion? Is the seller responsible or the buyer responsible for paying it? So pretty much nothing mentioned on the contracts.
But there is something in the contracts. I forget what clause it is, but it says that the buyer is responsible for all taxes or something. It's early on in the contract. I don't have one in front of me, but there is
Right
something.
on the front page.
Pardon me?
It's right on the front
It's
page.
right on the front page of the buyer's where it has the closing costs and who's responsible for what. It says the buyer.
Okay, so if the contract's valid, buyer's on the hook. I think that's what it says. much like property transfer tax or any other tax that applies. But if it gets down to completion date, we show the buyer the statement of adjustments, and there's GST, and they freak out and they say, we never knew about this. Well, guess who's on the hook? The realtor. Because you failed to advise your client before, and that needs to be done before subject removal. If we don't get the contracts till after subject removal, we don't get them till they go firm. So you need to be aware if there is a GST issue. You need to be aware if there's any issue prior to subject removal, whether it's taxes, whether it's title, whether it's strata, whatever it may be, and advise your client to get advice. You don't need to know the answers. You need to know that there's an issue, or there may be an issue, and your client needs to be referred to someone who can give them the proper advice. So that's where if we get an issue on closing with GST, and our client has to pay it, and they weren't aware of it, then you're the one that they're going to look to, because you should have told them that there may be a GST issue, and that advice should be given in writing prior to subject removal, not after, because after subject removal is too late. It's kind of like this whole thing about Terra Firma that we're doing. If there's an easement or a covenant or a right of way on there, the client needs to know before subject removal, not after. So you need to get that advice to them, and it should be by email, like a quick little note saying, you know what, I'm not sure if GST is applicable on a hobby farm. I think you should get advice on that from your lawyer or your accountant. That's good enough.
Can I ask something kind of on this again? So on the front,
What?
on the front page where it says buyer's responsible for GST, if we go then and put the term in the contract that if GST is applicable, it will be paid in the purchase price, should we be, I know we're not really supposed to alter the basic contract, but should we be crossing out GST and putting that in on the very first page?
You could, or what you could put is not to be a lawyer about it, but notwithstanding paragraph 3 on page 1, GST is included in the price. So you don't need to cross anything off. It's kind of like the assignment provisions. I think they're 21A or whatever paragraph that number is now. There are times when you're allowed to assign. So what you can do is just notwithstanding 21A, the buyer has the right to assign to a family member or something like that.
Hey, Tony, they're asking, is Terra Firma coming back to the islands?
Not yet. There's not enough of you that want it.
We're growing, Tony. We're over 130 on the island now, so. So, but on Terra Firma, Tony, is there? Can you expand a little bit on what it does, how it works, who it services, what the benefits are?
Yeah. And I kind of mentioned this just a few moments ago. When your client's entering into a contract of purchase and sale, the listing agent provides you with a title search. And the title search may show, now there's some free and clear properties for sure, but many of them have easements, covenants, rights of way. Even on the strata, you think of downtown Vancouver, there could be 50, 60, 70 charges on that title. And on the strata, most of them don't mean anything. But you're giving that to your client, and your client's looking at it like it's ancient hieroglyphics. Like it might as well be in Latin. They have no idea what those things mean. You have a duty to explain the title to them, and to at the very least recommend that they review the title and those charges if they're of concern to them. In particular, if you don't do it on a single family home, you are out and out negligent. Simple as that. If your client's buying a single family home and there's an easement, you better pulling that easement and giving it to your client for them to review. Even if you're not on Terra Firma, you better be doing that. Or at the very least saying there's an easement, I recommend you get it pulled. But with Terra Firma, you no longer need to do that. With Terra Firma, you have a listing that has an easement, you send us the title search, we pull the easement, we give it to you along with a one-page legal opinion as to what it says. So it helps with your listings in that you don't even need to make it subject to title. You have all the charges already advanced. The other realtor calls up and says, what's this easement about? What's this right away? You just flip them the email. It's done. It's over with. Think of a strata. There's 48 charges on there. Most of them don't mean anything. But if you want to pull those, it's going to cost you $1,000. They're $20 each. Well, instead, for $100 a month, you can send us that title search, and we will pull every single non-financial charge and give it to you along with a one-page legal opinion for every single charge. So now you have a buyer who's looking at this title search, and it's 9 pages long, and there's 48 charges, and they're like a deer in the headlights. And instead of saying, you know what, they're standard, don't worry about it, I've sold many units, they're in every single place there, instead of just popping out, what you say is, don't worry about it, I've got a lawyer on retainer. Odds are these 48 charges don't say anything significant, but we might as well get the lawyer to review them all. Then you send us the title search, we send you a Dropbox link, you send it to your client saying, the lawyer's reviewed all 48 charges, have a read, if you have any questions, call the lawyer. For $100 a month, it makes your listings easier to sell, protects your buyers, it helps you in listing presentations, enhances your brand. I mean, it's a no-brainer. It really is. I'm becoming more and more passionate about it. We now have over 900 realtors approaching 1,000 on this service, all in kind of greater Vancouver, lower mainland anyway. We don't do the island, we don't do the interior, we don't do Whistler. But we basically from Abbotsford in to North Shore out to the border. So that's kind of...
So Tony, Terra with the Don Walton group is saying we were early adopters on the island and loved it. Was so sad that it went away and wanted it back. So we have a few people on the island and the Okanagan and Whistler who always are asking to bring it back. The problem is we just don't have enough of the charges, and this thing's cost an awful lot of money. I mean, we have 90,000 charges at $20 a pop. So we're into it for $1.8 million hard cost. We're trying to generate some cash in the lower mainland before we expand to the island or somewhere like that. But having said that, if we've thought about Victoria, Nanaimo, Kelowna, because we have offices up there, but we would only do it for realtors who send us conveyance files. So it would almost be part of the Spagnuolo package. So we're not doing that yet, but that's probably the only way we would come up there. So we can make it back. We can make those losses back on any conveyance that we do.
They're wondering if you're going to Chilliwack.
Again, not yet. We don't have an office in Chilliwack.
Well, this has been extremely informative,
Terra
Tony.
Firma, let me kind of back up. I started this really naively, thinking that this was going to take off and I'm going to go across the country. Well, it's just been way too expensive. I mean, I've spent all that money just in the lower mainland. There's no way I'm going to Toronto and Winnipeg and Halifax and all that stuff. And now it's becoming part of Spagnuolo and Company. So we're helping you. We think Terra Firma helps you with your brand, with your image, with your professionalism, with your insurance, with all that kind of stuff. We'd like you to help our group of companies. So we'd like to get some conveyance files from you. So we have a number of high volume realtors. We have these realtors that are like mega teams, and they bombard us with title searches, but they don't send us business. We've just kicked them off the system. We have no interest in helping those realtors. So I'm becoming a little bit more cynical as I get older, I guess. But yeah.
Well, obviously the service is very much appreciated. So I'm sure that with all the time and effort and energy that you spent today, I think you may have converted a few souls to send you some business as well along the way. So I just want to say thank you so very much.
I'm very happy with it. It's going great right now. We're adding realtors every day. So just to get back to the whole premise of it, you need to do the research before subject removal, and this is a great way to do it. So at the very least, if you're not